Hello and welcome everyone. I am really sorry for the delay. There was some technical issues. I was not able to connect my screen with this webinar. So that's the reason we started a bit late, but no worries. We will end also a bit late today as we have to cover the remaining part. We are around 23 minutes late. So please bear with me. I'm really sorry for that. Okay, shall we start? Are you able to see the screen, hear the voice? And video, everything is okay now? Please confirm everyone. Hello beta, yes. Okay, so let's start. In the last lecture, we have done some accounting equations where we discussed about what are the two treatments on the asset side versus the capital as well as the liability side. I gave you one question to solve it, and I think you were able to solve this question. We have five points which we have discussed in this. Let us go through those points again. So the last part, the fifth part was remaining in the last lecture. We were time up on that. Okay, fifth part I was about to tell you. So what does the fifth part in the last question says? It says Mr. Y has withdrew rupees 10,000 cash from the business. If any person who is the owner of the business, the Mr. Y started the business, so he's the proprietor. So if the proprietor has invested some money, we say it capital. Now, if we take back the money, so it is called the drawings, and drawings will be deducted from the capital. So how much is the drawings? That is rupees 10,000. When there will be 10,000 rupees of drawing, the capital will reduce by 10,000. Obviously, he has taken the cash. So my cash will reduce by 10,000. So it would be minus 10,000 in cash, minus 10,000 in capital, and finally the figures would be I would be remaining with 40,000 of cash, 30,000 of furniture, and 1 lakh of machinery. What would be my liability? It would be again 1 lakh rupees plus capital would be 80,000 minus 10,000, that is 70,000. So both asset and liability side would be 1,70,000 equal to 1,70,000. Am I clear, everyone? Is there any doubt? Okay, great, perfect. Now let us talk about the journal entries. Today we are going to do the real life journal entries, which is the most important part when it comes to asking in the interviews, when you will go for the interviews being an accountant. Yes, so these journal entries are the most basic thing which they will ask you, and this is something you should have knowledge about. So for journal entries, first we are going to talk about some accounting rules. We have some accounting rules. Let us look at the accounting rules first. Accounting rule says we have two things for every transaction. For every transaction, there would be two things. That is debit, which is denoted by DR. Okay, doctor nahi. It is debit, DEBIT. Okay, then we have the another effect which is called credit. It is called CR. So somebody can interpret it as doctor and compounder, but it is not actually a doctor and compounder. It is debit as well as credit. What does DR represent? It says a debit receipt. What does credit represents? It represents a credit receipt. Okay. So we have two things. We have one effect which is called debit effect, and one have the credit effect. Debit DR is known as debit receipt. Credit CR is known as credit receipt. That is the two effect for every transaction. This is the basic for accounting. Now, what are the rules? What are the rules for accounting? Okay, I will give you three rules. These are the golden rules of accounting. If anybody asks you that what are the three golden rules of accounting, so your answer would be that the three golden rules of accounting is: first rule, debit what comes in. Whatever is coming into the business, that should be debited. For example, if cash is coming into the business, the customer has paid 20,000 rupees to us, so 20,000 is coming to us, it would be debited. Yes, so whatever is coming into the business, that is called debit. What is credit? Obviously, if debit is what comes in, so what would be the credit? Come on, everyone. What goes out? Debit, what comes in. Credit, what goes out. Okay. So in this case, if I say, I will write some examples. Example. Cash received rupees 20,000. So in this case, what I will do, I will debit my cash account by 20,000 rupees. I will debit my cash account by 20,000 rupees. It will be my debit account. Okay. Wow. Anybody knows about the real account, personal account, and nominal account? Yes. So the first rule which I am telling you right now, this is about the real account. What do you mean by real? The things which can be seen coming into the business and going out of the business. For example, if I purchased a furniture, so furniture is coming in and I have paid cash, so cash should go out. So in that case, furniture would be furniture account would be debited and my cash account would be credited. Am I clear, everyone? So as per the real account rule, if furniture is purchased for cash, what would be the transaction? If it is purchased for cash, so furniture would come in, it will come into my business. So furniture account will be debited and cash is going out. So cash account would be credited. As I told you, for every transaction, there will be two effects. So here are the two effects. One is the debit and one would be the credit. If the amount is also given, let's say 15,000, the furniture was of 15,000. So furniture account will be debited by rupees 15,000 and cash account would be credited by rupees 15,000. Okay. Is my point clear? Okay. Wow. So this is called the real account. Real account has one debit and one credit. In this, we can see the things coming in and things going out. Debit what comes in, credit what goes out. Okay, very good. Sir, do we have to learn these three rules? No, you have to just listen it right now, and then when we will apply, you will be so much expert that you don't need to learn these rules, but you will be applying automatically with the help of your developed concepts. Okay, so this is the first rule of our accounts. Going to the second rule. So first rule, I told you about the real account. Now let's talk about some personal account. What do you mean by personal account? What will you do if someone gives you the money and someone takes the money? So, for example, if I have given loan to some other person, that is very clear, the cash is going out. So cash account would be credited. But if I have given loan to that person, he will return that money to me after some period of time. Yes or no? And if he will receive, if I'm able to receive some money after some period of time, so that person is an asset for me. That person is a asset for me because in future he will give me the money back. So he is my what? He is my giver or the receiver. So in this case, he is receiving the money from me. So I have again my two rules: debit and credit. If I have given money to someone else, so the person who is receiving the money, that will be debited. So what is the rule? Debit the receiver. Why receiver? Why we are debiting the receiver? Because he will give me money in future. He will give me money in future. Debit the receiver and credit the giver. Giver means what? If I have taken something on credit, so in future I will have to pay him back. If in future I will have to pay him back, that would result into the future cash outflow. So therefore, in this case, he will be credited. So debit the receiver, credit the giver. If you have taken some goods on credit, so somebody has given you the goods, you are the receiver in that case. You are the receiver in that case, and he has given you the goods. So in our books of accounts, if we have taken the goods, so the person would be credited. So we are dealing with the persons here. That is the reason it is called the personal account. The rules for the personal account. Let us do an example, then it would be quite clear. So everybody note the example. Goods purchased from Mr. Ram. Goods purchased from Mr. Ram on credit of rupees 25,000. Goods purchased from Mr. Ram of rupees 25,000. What you will do in this case? So goods is a real thing. It is a real thing which I can see coming in. So for that, there is purchases account. We have the purchases account. Your purchase account would be debited because the goods are coming in. I will write the reason also, because goods are coming in. Okay, so if the goods are coming in, our purchases account would be debited by 25,000 rupees. So have I paid anything in return of this 25,000? The answer is no. Why I haven't paid? Because it is purchased on credit. So the payment has not been made right now. But do I need to pay in future? Answer is yes. To whom I have to pay? To Mr. Ram. So who is Mr. Ram? He is the giver of the goods. He is the giver of the goods. That is why we will credit Mr. Ram. So here it would be purchases account debit to whatever is debited. It is mentioned in the first line. OK, so here is your purchases account, and giving a little gap to understand what is the credit. We will give a little gap here for every transaction. I will give this gap. OK, it will be to Mr. Ram's account. So Mr. Ram has given me goods. So who is Mr. Ram? He is my creditor. He is my creditor because in future I have to pay. So by what amount Mr. Ram will be credited? Answer is 25,000 rupees. Okay. So the goods have been purchased. For that, we have debited the purchases account and we have credited the Mr. Ram's account. Very good. Wow. Moving on. So this is the second rule. Let's do one more example for the personal account. Example 2. Mr. Sham. Mr. Sham has purchased goods from us on credit of rupees 50,000. What Mr. Sham has done? Mr. Sham has purchased the goods from us. So if he has purchased, that means I have done the sale. Yes or no? If Mr. Sham has purchased the goods from us, so obviously we have made the sale. And how much is the amount for? It is 50,000. So in this case, the Mr. Sham is the receiver. Mr. Sham is the receiver because he has taken the goods from us. So here what we will do? Here we will debit Mr. Sham. Mr. Sham's account. For account, we write this A/C. Mr. Sham's account will be debited by 50,000 rupees. And obviously, if I have sold something, the goods will go out. So my goods will go out. So I will write to sales account. To sales account. That is 50,000 rupees. Being goods sold to Mr. Sham on credit. What is this which I have written right now? This is called narration. For every general entry, you have to write a narration. So what is the narration? It is a brief description of the transaction which is happening. What is done? It will always start with being. What is being done? That is goods has been sold to Mr. Sham on credit. So that is the reason Mr. Sham is debited and sales account is credited. So one thing you might have understand by these two examples, whenever we purchase goods, our purchases account will be debited. Our purchases account will be debited. And whenever we sell goods, you have seen that sales account would be credited. Sales account would be credited because in purchases, the goods are coming in. Goods are coming in. So as per the rule, debit what comes in, and from the sales, the goods are going out. So this would be credited. That's the reason it is being credited because the goods are going out in this case. Am I clear, everyone? Any doubts? Speak up, guys. Any doubts? No, sir. All clear. Okay. So I have told you two rules. The first rule is debit what comes in, credit what goes out. This rule is applicable for the real accounts, the things which you can see, touch, feel, you can see coming in, you can see going out. So that is the rule for the real account, the debit and the credit. So what are the real things which we can see? Obviously, the goods which we are dealing with, I've already told you about those goods. For any asset, for example, furniture, plant and machinery, land and building, etc. These are your real things which you can see coming in and going out. So whenever it comes in, you have to debit that account. Whenever it goes out, you have to credit that account. That is about the rules for the real account. Then we studied about the personal account. For personal account, we have debit the receiver and credit the giver. So if somebody has taken the goods from us, he will give us the money in future. So that is why we are debiting that person, and somebody who has taken the money, or I would say somebody who has given us the goods. Okay, he has given us the money. So we have to pay him back in future. So that is why this will be credited. That is why it will be credited. One hidden rule, should I tell you guys? That is a secret which you can use while doing this debit and credit. I think nobody has told you about this secret. Okay, the secret, and you also don't have to tell everybody. This is the secret rule. What is the secret? Whenever you do the debit, it feels good. I will feel good when I will do the debit. And whenever it feels bad, whenever it feels bad, you have to do the credit. Come on, everyone. Now let's understand this secret. Okay, this is the very secret thing which is not always taught somewhere. But yeah, I use it to teach my students so that they can understand in a different way if they have not understood in the original way. If you have already understood in the traditional way, that is totally fine. You can apply that method now. But for us, let's try once the feeling method. What is the feeling method? If you feel good, you have to debit. For example, if I have received from cash, I have got the money, I will feel good. So cash account would be debited. But if that person says me that you have to give this money back after 2 months, I will feel bad because I have to give him back. So that person would be credited. So for example, if Ram has given you 5,000 rupees. So you will debit the cash account because you have received the cash account by 5,000, but in future you have to pay him back. So that is why you will credit Ram account by 5,000 rupees. So you are feeling good, debit that account. If you're feeling bad, credit that account. Am I clear? This is the very secret thing. You will not learn into any books, not learn into any lectures, but this is the trick which you can use for determining what should be debited and what should be credited. So for example, if I have given money to someone, if I have given money to someone, so cash will go out. If cash will go out, I won't feel good. Okay, given money to Sham. I have given him money. How much money I have given? Let's say I have given him 20,000 rupees. I have paid him 20,000 rupees to Mr. Sham. Now what will happen? I have given him money. Cash has been gone out, so I won't feel good. So what I have to do with the cash account? Tell me everyone. What will I will do with the cash account? Debit or credit? I will feel good when cash is going out, or I will feel bad if cash is going out. Come on, everyone. Sir, the secret rule is very nice. Thank you so much. Yes, I know you must like this method. So when the cash is going out, you are feeling bad. So 20,000, this will be credit. This will be credit. But there is another effect. If I have given Mr. Sham 20,000 rupees, he will pay me back after some time. And whenever he will pay me back, I will get the money. So I am happy that it has been. In future, Mr. Sham will return me that money. So what I will do for the Sham account? Sham account would be debited. Is it clear, everyone? Now the process is very, very simple. Sir, what you were telling us earlier, the real accounts, the personal account, everyone was going above my head. But now it is everything going in my head. Yes, I can understand your feelings because whenever I was a student, I used to develop some tricks myself. Okay, obviously the teacher will be teaching what is there in their books and what he could explain according to his experience. But if you think about it and have a deep dive into it, you will learn some special tricks which I'm going to cover in whole your financial accounting, and you will have a lot of fun. Okay, so according to this rule, what we have done, whenever we are feeling good, we are debiting, and whenever you are feeling bad, we will be crediting. Now everyone, I am giving you one transaction. Just try what account should be debited and what account should be credited. Furniture purchased for cash, rupees 15,000. Come on everyone. Give me the journal entry for this transaction. What they have done, the furniture has been purchased for rupees 15,000. Try. Wow, amazing. I am getting so many answers. That's great. And I would say all answers are correct, except there is one misconception which I will remove it right now. Okay, so that you don't do that mistake earlier. The correct answer first, let me tell you. The correct answer, the furniture has been purchased. So furniture would be coming in. So correctly said, the furniture account will be debited rupees 15,000. And if I pay the cash, whenever I pay cash to someone, I don't feel good. Is anybody in my class who is paying the cash and he's feeling good? Answer is no, we don't feel good when we pay cash. So the cash account would be credited. So this is the journal entry which we have to do when the transaction come. Now to complete this journal entry, we have to also write the narration. Obviously, this is going to be a MCQ, so you don't need to write the narrations into the MCQ questions. But just to learn for your future, for your upcoming exams, if you are appearing, so obviously you need to understand the narration. It would be being furniture, just the description of what is written over here. Being furniture purchased for cash. Do not write the amount in the narration because it is already being displayed in the journal entry itself. So do not write the amount over there. Just give a brief description of the entry. OK, now one more additional thing. If I have given date that the furniture purchased for cash rupees 50,000 on, let's say, 1st of July 2023. So I will mention the date here as 1st of July 2023. This is the format for doing the journal entry. First column is the date. First column is the date column. Then we have the particulars column where you have to write the account which has been debited and the account which has been credited. And then there will be two amount column. That is the amount in rupees, debit amount, and one would be the another column which will be called credit amount in rupees. So this is the basic format for any journal entry. This is the basic format for any journal entry. Now, if they've also given the information that you have to do this journal entry in the books of Mr. X, so I will also write here. I will also write on the top that in the books of Mr. X, this will be a heading, and I will mention journal entries. And if they have given the period, I will also mention for the period ended this. For example, this is for 31st of March 2024. This is for the period ended 31st of March 2024. This is again the general and theoretical thing which you do not need to learn right now. But obviously, if you are doing a journal entry for your future exams, any exam which you are appearing, so that would be necessary. That is the part which we need to understand. OK, but as I said, for now, you have to focus on the MCQ part. So if I give you this question, now my question will change. I'm giving you another one. First, let me clear the misconception which I was talking about. OK. OK, one student has mentioned that there is one more column here, the leisure folio. Very good. We have the leisure folio number, one column as well. Near your amount column, I would say before your amount column, there is one more column that is called the leisure folio. That is the standard format. Here you can write the number of entry in your leisure account. So what is your leisure account? That I will tell you later on. That is why I have not shown you this column right now. But yes, that would be coming ahead. OK. So the misconception which I am talking about, which some student has done, they have mentioned the entry as purchases account debited for 15,000 to cash account. So what they have done, the credit effect is 100% correct. The credit effect to cash account 15,000, that is 100% correct. But what is the mistake here? The account which we have selected for purchases. Sir, few minutes back, you only told us whenever we purchase the goods, you have to debit the purchases account. So we have followed your instructions only. Beta, my child, what I am saying, the purchases account will only be used for, it will be only be used for goods which is being traded or manufactured by the entity. Sir, what does this mean? I can understand the language which you have written, but I can't understand the meaning out of it. I will tell you. if I am doing a business of t-shirts, okay, so the t-shirts would be goods for me. That is the goods. For that, if whenever I purchase the t-shirt, I will do the purchase account debit. But if I am dealing in t-shirt and I am buying furniture, so is furniture a good for me or it is an asset? It is an fixed asset. It is not a goods. I am not going to sell that furniture, right? So for purchases account and for the sales account, you have to use only and only those goods which are being traded by the entity or which are being manufactured by that entity, because that is your business. That is the main source of income for you. Your business is not to purchase and sell the furniture. So whose business is to sell the furniture? That is the furniture shop. For furniture shop owner, the furniture, the chairs, everything, that would be the stock for him. That will be the stock which he is dealing in. And for that person, the furniture shopkeeper, if he purchases t-shirt for his employee, so is this a purchase account? It is a stock. No, he's not going to sell those t-shirts. He has to sell the furniture only. Okay, so according to my point, the goods which we are dealing in, we are being trading. Acha, what is the difference between trading and manufacturing? Trading is, for example, I am a person. I purchased t-shirt, let's say for 1,000 rupees, and I sell t-shirt for 1,200 rupees. So what I do, I go to market, I purchase the t-shirt, I pay 1,000 rupees, and then I sell it to my customer for 1,200 rupees. I make a profit of rupees 200. Am I doing anything to the t-shirt? Am I adding the design? Answer is no. The box is coming and box is being sold. Nothing else is done. So this is called trading business. I think most of you will be already aware about it. So if you see all the retail shops in the market, those are doing the trading business. They are not manufacturing. But if I am using the machine to convert the thread into a cloth and then a cloth into a t-shirt, that would be termed as manufacturing. That would be termed as manufacturing. So all those goods which you deal with for trading purposes or for the manufacturing purposes will be termed as goods for you, or it will be termed as a stock for you. It will be a stock for you. Okay, and whenever you purchase that stock, then you will debit the purchases account. Not in case of other things. Like here, the furniture was purchased. That is not the one which the person is dealing with. Okay, so furniture account will be taken for the this purpose when we have our goods not as a furniture. Okay, I will take one more example, then we can switch ahead. One more example for you. Let's say, let's take the reverse transaction of this. Furniture sold for rupees 5,000 in cash. Furniture sold for rupees 5,000 in cash. Do the journal entry. Come on, everyone. 2 minutes time. Do the journal entry. What account would be debited? What account would be credited? Wow, that's great. I've got many answers. And again, there was one answer which is incorrect one, the sales account. Beta, I am not dealing in furniture. I am not dealing in furniture. That is an asset. Whenever you have been given the goods, that would be used for the purchases and sales. Okay. The furniture is not the goods. Have I written in anywhere in this line the furniture, or in bracket I have mentioned the goods? No. So furniture was there and I have sold it for rupees 5,000. So in that case, that is an asset being sold. It may happen the furniture is now not in a good condition. So I have sell it as a scrap and I have got 5,000 rupees in return. So is if this is the case, what we will do? The furniture has gone out. If furniture is going out, I will feel bad. So furniture account would be credited. And I have got cash. I have got cash. I will get the money. So this account would be debited. So the journal entry correctly mentioned by many people, that is cash account debited with rupees 5,000 to furniture account, again rupees 5,000. In the bracket, it would be mentioned as being furniture sold for cash. Okay. Even if you write being furniture sold, that is also fine because everybody can see it has been sold for cash by seeing the cash account in the debit side. Am I clear? Is it clear? Very, very clear or just clear? Come on, speak up. This is the very, very interesting lecture today. Okay, so if anybody has missed it, do go to the your channel and relook this webinar because this would form the basic for all the upcoming lectures. Okay. Am I clear, everyone? Very, very clear. So now I have told you very much examples about the two rules. That is very, very clear. Thank you, sir. Most welcome, Beta. So one rule I have told you about the real account and one rule I have told you about the personal account. Now let's talk about the third rule. Third rule. Third rule of your accounts. Let us write down the first and second rule again. So first rule was for the real accounts. It says debit what comes in, credit what goes out. Then we have personal account where debit the receiver. Why receiver? Why we will feel good when somebody is receiving the money? Because he will pay me back in the future. Okay, that is why it is being debited. But credit the giver. So if I taken the loan from someone, he will give me cash. So if cash is coming in, that is very, very good thing. I will be happy if cash is coming in. But obviously I have to pay him back in the future. And that is not good if I have to pay the money back. If he is giving, that is fine. But if I have to pay him back, that is not good. I will feel bad. Okay. So the credit would be giver. One request has been came, sir. If you are free, can you extend the class? Yes, dear. I am going to extend this class because we have started late. So this will be extended. Yeah. Okay. Let's talk about the third rule, which now is going to be reverse of what I said. What I have told you, I have told you one secret. What is that secret? Debit when you feel good, credit when you feel bad. Now let's do the reverse of this. We will debit when we feel bad and we will credit when we feel good. But this is just for your understanding that I am telling you this right now. I will now correct it. Okay, I will correct it. Let's see. This is called nominal account. We have real account, we have personal account, and now we have nominal account. What do you mean by the nominal account? We have two effects, that is debit and another effect is credit. What is being debited over here? What is being debited over here? The debited thing is nothing but your expenses and losses. What is debited? The expenses and losses are being debited. Okay, why expense as losses will be debited, that I'm going to tell you. But just first listen to the rule. Debit the expenses and losses, credit the gains and incomes. So we have to debit the expenses and losses, credit the gains and income. Now you will say, sir, you said earlier, what you have, just a minute, guys, just yes, dear. I just needed to plug in the charger so that the battery doesn't drain off. Okay, so what happens in the nominal account? Whenever we talk about the nominal account, there is some changes in general. What is the changes? We are debiting the expenses and losses. So in the general way, if you think if you are doing some expenses and there is some losses, so that you should feel bad, that you will feel bad. But what I would say for another perspective, think about the perspective different. If I am eating an ice cream, so I have done the expense, right? The cash has gone out, cash will be credited, everybody knows in there. But if I am eating the ice cream, if I'm doing some expenses, will I be happy? But yes, answer is yes. I will enjoy eating the ice cream. If I got a packet chips of Lay's, I will be happy, but that is my expense. So whenever you do the expense, it will be the cash outflow, obviously, but you will be happy doing the expenses. Sir, why you are saying for the business perspective, the expenses are good? Because if you have a good luxury office, you are treating your customers with welcome drinks, with some snacks and everything. So customer would be happy. So expenses are always done for the good. Nobody wants to do the wasteless expenditure, but if expenses are happening, you have to improvise your thinking. Now you should think that whenever I am spending on myself, I am getting the benefit of that thing. And if I am getting the benefit, I am enjoying that benefit. So for example, I have to go to one country and I have to book a hotel. The higher I will pay for the hotel, the higher is the facilities which I am going to get. I will get a luxury jacuzzi tub where I can relax and have a view of the sea side and the sunset. So that is the beautiful thing. Obviously, I have to pay more for that luxury. So expenses is something which will give you some luxuries, some benefits. So that is for the good. Okay, and by this expenses, you will have some losses also because obviously you are going to pay for this. So that is a loss. That would be the reduction in your profit. That is why it is mentioned expenses and losses. So from today, all you will tell your parents and your family members that we enjoy doing expenses. Why? Because we get a good feeling out of it. So that is the reason it is being debited. Okay, sir. I got your point. We have to debit the expenses and losses. Now let's go to the second thing. That is the credit. Credit the gains and incomes. How come they are saying, sir, you told us that credit means feeling bad. So if I am having a gain, if I am having an income, so how will I feel bad? It is a good thing. Now, again, I'm saying you have to change your perspective. For the first and second, the rule was very, very simple. You enjoyed the rule very much. But for the third one, you have to twist a rule a bit. Okay, to make a better understanding, now I am twisting the rule over here, not twisting exactly, just doing the reverse, but twisting the process of your thinking. If you do the expenses, you are enjoying the benefits. But if somebody is paying you, so he's taking work from you, right? If I have employed a person, I will say I will pay you 10,000 rupees per month. But for getting that 10,000 rupees, you have to come daily to office. You have come daily to office right from 10 a.m. in the morning till 7 p.m. in the evening. And you have to come for 30 days. No holiday. There is no holiday. You have to come for 30 days daily to the office. So obviously, when he is taking so much work from me and paying me this 10,000, so I agree that 10,000 is an income, but there is a lot of pain involved. What is the pain? That daily going to office, working from 10 a.m. till 7 p.m. I cannot do my personal stuff. I am now bound to do the organization work for the company I have to work. So I won't feel good because if somebody binds me to do anything, I don't feel comfortable. So if you're getting the income, that is not free. You are doing something. You are paying something. You are giving something intangible to that person. That is the reason he is paying you. In this world, nothing comes for free. You have paid something, that is the reason you are getting something. So here the income of rupees 10,000 would be credited, and I will feel bad by getting this income because I have put a lot of efforts in earning this income. Obviously when you receive the cash you will feel happy, yeah, that is the concept different, that is the real account concept, but I have to do the lot of efforts for that, so I will feel bad for that. So if I say the cash will come, I am happy, cash coming in of rupees 10,000, the cash is coming into my business. But if there is some efforts I have to give some efforts out. So I will say just for the joke perspective, yes, to efforts account, the efforts are going out from me. The efforts account would be debited by 10,000. But practically, obviously, not the effort. There is no efforts account. We are talking about business. So if you have given the cash to someone, okay, so might be you have to credit the respective other transaction which is happening. Okay, for example, I have received the cash of rupees 10,000 and I have sold some goods. So the my goods will go out. My goods will go out. So for goods going out, I use the sales account. So it would be to sales account. Am I clear, everyone? Come on. Am I clear? Too much of concepts today, sir. Yes, those concepts are necessary. I was waiting for this day so that I can tell you these concepts and then we can rule over the accounting very, very much ahead. Okay, I am a chartered accountant by profession. You guys are now going to have expertise of a chartered accountant who are experts in your accounting field. So your accounting would be no less than a chartered accountant. Okay, that I can guarantee you. The basic would be that much strong. I will make your basic that much strong so that you can increase your proficiency in the coming time. So 3 rules. Let us go through all these 3 rules again. The first rule was the real account rule. What does the real account says? Real account says debit what comes in, credit what goes out. So if I get the cash, it will be cash account debited. If cash goes out, it would be cash account credited. Okay, sir. Personal account. If I am giving money to someone, so debit the receiver whoever has taken the money, the whoever has received the money. So the receiver account would be debited and credit would be given to the giver who has given me the money because I have to pay him back. I will not feel good when I will pay him back. And last account would be the nominal account, where I say whenever you do some expenses and incur some losses, so you will have fun because you will learn from that experiences, you will enjoy, you will have feeling good feeling in yourself. And then we have to credit the gains and income because for earning that gain, for earning that income, you have to do a lot of efforts and then you can earn that income. So obviously we will be happy when we receive the cash. So we will debit the cash account, but we have done a lot of efforts. So we will credit the respective income account. So sales is an income for the business. Okay, so that is the sales account being credited. This is an income account. It is a type of a income account. Am I clear, everyone? Is the concepts clear? Come on. Nice example, sir. Clear, sir. It's clear. Okay, lovely. I'm having fun now. Now, let's have fun together. Let's do one question where I am going to give you some journal entries to do. Okay. Mr. X commenced business. Mr. X commenced business. Sir, this class is so much helpful for us. Hope everyone is enjoying that much. Yes, that's great. Okay. Mr. X commenced the business. First transaction with cash rupees 20,000 introduced as capital. Introduced as capital. Okay, that is the first transaction. Second transaction. Going to give you 5 transactions for simplicity right now, and then we are going to do many transactions. But first, let's do only 5 transactions. Mr. X purchased goods rupees 5,000 in cash. Purchased goods rupees 5,000 in cash. Third transaction. Purchased goods rupees 10,000 on credit from Mr. Roy. Mr. Roy is a person who has sold the goods on credit to Mr. X. So Mr. X has purchased the goods for rupees 10,000 from Mr. Roy. That is the third transaction. Fourth, sold goods. Sold goods for rupees 20,000, 25,000 in cash and sold goods to Mr. Sony, Mr. Sony on credit rupees 20,000. Come on, everyone. Do all the 5 entries. Wow, I'm getting so many answers. Amazing. 5 transactions I have given you. Try to apply the rules. Okay, try to apply the rules and then do these questions. 5 minutes you have. Time's up, guys. Let's do it together. I've got so many answers. Wow, that's great. Let's do all the transactions again. Now I will change your perspective of thinking. We will think as per the concept which we have learned right now, not what we were doing earlier. Okay, the cash has come into the business. Who has brought that cash? Mr. X has brought that cash. So anything which is invested by the owner, that will be termed as capital. So if cash has come into the business, so cash account will be debited by how much? 20,000. We will feel good that the cash has been coming into the business. But obviously when the business will close down, Mr. X will take the cash back. So our capital account would be credited by 20,000. Am I clear? Some have mentioned it is excess capital. That is also fine. But as we are doing the business for sole proprietor, so obviously Mr. X capital would be there. But if the business is for a partnership firm, then you have to mention that which partner has brought up the capital, whether it is a X, whether it is Y, whether it is Z. So you have to name that is a X capital account or Y capital account or Z capital account. Okay. So here it is cash account debit 20,000 to X capital account 20,000. Wow. Perfect. Second, purchased goods. So if I purchase the goods, purchases are my, if I purchase the goods will coming, I will feel happy. So purchases account purchase account would be debited with 5,000. But what I have given in return, it has been purchased for cash. So when will cash will go out, I will feel bad. So cash account will be credited by 5,000 rupees. Okay, so that was the second effect. Now let's go to the third effect. Purchased goods rupees 10,000 on credit from Mr. Roy. So if I made the purchases, so I am very clear that the purchases account will be debited because the goods will come in. Purchases account debited. For how much amount the purchases account will be debited? For 10,000 rupees as a whole. I am not having much space, so I will shift it here. Okay, so purchases account is being debited by 10,000 rupees. Now, whether the cash has gone out, answer is no. But what has happened? Mr. Roy has given me the credit. So Mr. Roy will be paid in future. I need to pay Mr. Roy in future. I will not feel good to pay him in future, but obviously I have to pay. So Mr. Roy's account would be credited by 10,000 rupees. Okay. Wow. Everybody has given a wonderful answers. Amazing. I'm just posting this. Now coming to part number 4. Sold goods for rupees 25,000 in cash. So if I am selling the goods, that is my income. And I have got cash. If I am selling the goods, I will receive the cash. So cash account would be debited by 25,000. 2. Goods have been sold. So goods have been sold. I will use the sales account. That is the income account. 25,000. The goods will go out. So that would be credited 25,000. Last, sold goods to Mr. Sony on credit of rupees 20,000. So have I received any cash? The answer is no. So what I will do here in this case, I will make Mr. Sony as my debtor. He will pay me in future. So in future, I will get money from Mr. Sony. So Mr. Sony's account will be debited. I will be happy to get the money from him in future. Mr. Sony's account will be debited to whom? We have sold the goods. Goods are going out to sales account. That is 20,000. Is everything clear to all? Is everything clear? Should I move ahead? Yes or no? Yes, sir. Perfectly fine. Okay. So here we have understood about the accounting entries. Now let me go to your book again and we will have a quick look over what we have learned right now. So we have seen the dual aspect concept. We have seen the dual aspect concept where we see that every transaction has two effects, the debit and the credit. Okay, so we have learned the accounting equation where it says the assets is equals to liability plus capital. We have done various questions on it. So assets is equals to liabilities plus owner's equity. We can say that that is the capital. Okay. Then we have learned about the rules of accounting. Okay. The concepts of debit and credit. What do you mean by debit? It is a debit receipt. What do you mean by credit? That is a credit receipt. Any transaction has two effects. One is the debit, one is the credit. Debit stands for DR, that is the debit receipt. Credit is represented by CR, that is the credit receipt. So these terms are very much embarking to learn for actual record keeping based on the rules. Now, what are the rules which we have talked about? For every account, we have two sides, that is the debit side and the credit side. Whenever the cash is coming in, what we will do? We will debit. So see the first example, the cash brought into business. The cash has been brought into the business. So they have debited this amount. Then we have received from goods sold. We have received the money from goods sold. So they have debited it. When they have credited, paid for goods purchased. So you have purchased any goods, it would be credited, 50,000 rupees credited. Paid for rent, I have paid for my rent expenses, 15,000 rupees. Now I have received total 1,25,000 rupees and I have paid 50,000 and 15,000. That means 65,000 has been paid. So the balance at the end is rupees 60,000. Can you calculate this balance? How to calculate? For example, let's assume this is an account. What this is called? This is basically the cash ledger account. This is called the cash account. Okay, we will do this, create this ledger, but let's see how this ledger balances. So if I do the total, just ignore what is written over here. Just ignore the balances here. Okay, and ignore the total also. We will do the total ourselves. At present, what is the total on the debit side? That is 1,25,000. What is the total on the credit side? It is the 65,000. It is 65,000. Whatever total is higher, the opposite side will have the balance. The opposite side will have the balance. That is why here it was mentioned the balance at the end. That is why it was mentioned the balance at the end. So how it is calculated? The greater side balance, that is 1,25,000 minus the lower side balance, that is 65,000. So 1,25,000 minus 65,000. Here it will come as 60,000, and in the total column we will write the total, that is 1,25,000 in the both sides. That is how an account has been represented. This we will do very much times in the coming classes. Type of accounts, we have learned about the type of accounts. So we have the personal accounts, we have the impersonal accounts. What are the personal accounts? Those are the natural person, for example, Mr. X, Mr. Y, Ram, Sham, Ganjam, etc. We have the artificial persons as well, where we have the companies and we have the representative person. We will go through all those things. But Representative person is, for example, for on my behalf, my brother is acting for any transaction. So he is my representative in that case. So all these are Mr. X, Mr. Y, Mr. Ram, Mr. Sham, Mr. Ghanshyam. Everybody is a personal account. Okay. So personal account, you know the rule. What is debit the receiver and credit the giver. Okay. Then we have impersonal account, which has been classified into real accounts. Real accounts that you can see coming in, whatever coming in that would be debited, whatever going out will be credited. And then we have the nominal accounts where you have expenses or losses that would be debited, and we have the income or gains that would be credited. Now everybody knows about this. So these are the personal account. As the name suggests, these are the account related to persons. For example, Suresh, Anil, Rani, which they have mentioned. We have artificial person, for example, companies, the corporate bodies. Okay, those are the artificial. They are not the real person, but they are the artificial person. So Infosys Technology account, Charitable Trust account, Ali and Sons Trading account, ABC Bank account. These are the artificial. And we have representative personal accounts. Although the identity of person to this is known, the convention is reflected as the collective accounts. For example, I have given salary to five people A, B, C, D, E. For A, I have paid 5,000. For B, I have paid 8,000. For C, I have paid 12,000. For D, 10,000. And for E also 10,000. So total salary paid here is how much? 45,000. If I have paid the salary, that is my expense. But in accounts, what I can do? I can do just one entry. That is salary account debited with whole 45,000 itself. So what does this salary account represents? This represents the salary paid to be paid to A, B, C, D, and E. This is an collective account for different person. That is the reason it is called the representative personal account. Okay. So that was about the representative personal account. Then we have the real accounts where you have machinery, stock, cash, vehicle, etc. These are the tangible which you can see. Intangible are the ones which you have but you cannot see or touch. For example, your goodwill. You have a goodwill in the market. Everybody knows your name and your shop is running by your name. Okay. For example, in Delhi, we have Haldirams. Haldirams is quite famous. He have a very nice goodwill. So do they have a value for the goodwill? Answer is yes. In accounts, we calculate the goodwill. We have several methods to calculate the goodwill that we will do again. But that is an intangible item. Goodwill cannot be seen, but it is there. So we have the trademarks, patent, copyright. For simplicity, you can take an example of intangible as a software. If I have a purchased one software, I got the license. Okay. That license cannot be seen or touched, but it is in the system. So that is called the real accounts. Those are the tangible or intangible accounts. And lastly, we have the nominal accounts. Nominal account are your expenses or losses and income or gains. So in nominal account, what we do? We debit the expenses and losses, we credit the gains and income. Now everybody is well aware about these terminologies. Okay, so now we have two approaches. That is the American approach or called the modern approach, and one is the British approach, or I could say the traditional approach or the double entry system over here. I will go to the American approach later on. Let's first see the British approach. British approach. One second. Yeah. So we have the British approach, which we have learned right now, or the double entry system, which bifurcates my accounts into three things: the personal account, the real account, and the nominal account, as you can see on the screen, the three accounts. So as per the personal account, debit the receiver or who owes to business, okay, and credit the giver who the business owes. The business has to pay money to someone, so that would be credited. Real account, debit what comes into the business, what comes in, and credit what goes out of the business. And last is the nominal account, debit all expenses or losses, credit all gains and income. So that is the three accounts which we use. On the basis of this, we can do the journal entries. Let's see how they have done the journal entry. Let's do one example. Mr. Vikas and Mr. Vaibhavi are husband and wife and started offering consultancy services by investing cash of rupees 5 lakhs and 2 lakh 50,000 respectively. So how much total cash has been come into the business? It is 7 lakh 50,000. It is 7 lakh 50,000. And if cash is coming in, the business will be happy. So we will debit the cash account by 7 lakh 50,000. But whenever the business will close down, we have to pay the cash back to Mr. Vikas and to Mr. Vaibhavi. How much amount to Vikas? 5 lakh to Vikas and 2 lakh 50,000 to Vaibhavi. So we will credit the Vikas capital by 5 lakh and we will credit the Vaibhavi's capital by 2 lakh 50,000. Okay, so the debit total, how much is the debit total? It is 7 lakh 50,000. This is debit. And what is the credit total? 5 lakhs plus 2 lakh 50,000. It is also 7 lakh 50,000. So both the accounts are being matched over here. Let's see the another transaction. You guys now will be the expert of these transactions. They buy office furniture of rupees 25,000 in cash. So furniture is coming in. We will debit the furniture of 25,000, but they have purchased for cash. So credit the cash by 25,000. Perfect. Now they have opened a current account in Citibank by depositing 1 lakh rupees. So cash has gone out and the bank balance has come in. So if bank is coming in, we have the bank balance. So debit the Citibank by 1 lakh. And if cash is going out, we will feel bad. It would be a credit 1 lakh. Okay, I think there are more examples which you can try by your own. But obviously, you can do all these questions till now. You can, 1 second. Yes, till here, till case number 7, you can do all those questions, and I think you will be pretty comfortable in this. But if not, we will discuss is into the next lecture. Okay, till then, have a great day. Bye bye, all of you. See you. Take care. Bye all. If there are any doubts, I can address now. Come on. Is there any doubt, anyone, which needs to be covered or any confusion? You can message me. Sorry. Any doubts? All grades are all clear. Wow, that's great. See you all. Bye bye. Take care.